Thank you. Welcome back. This is Dennis Sheffield with Team Sheffield Financial Services. And this is the second part of our series on financial matters. And again, these are short series, should be no more than, 10, 15 minutes or so in duration. And we just want to share information with you as it pertains to building a financial strategy to accumulate wealth for you and your family. And so, if you recall in the first segment, if you will, we talked about building a foundation, financial foundation, and we based that foundation on six principles. Those principles was the principles of money management, and if you recall, they were paying yourself first, a minimum of 6% of all the incomes that you earn. Of course, taking that money and then investing that money, understanding how compound interest affects your investment, and then never losing your initial investment or never losing principal, and then doing business with those who do business with you, as well as charity, giving back to those less fortunate than yourself or to organizations, different things that you may have cause or interest in. And so after we establish the foundation, then we want to go to the building blocks. And I may have mentioned to you that they may be, that there perhaps are about 7 to 8 different building blocks that we use when we talk about building financial strategy. And the first of those building blocks is the block of protection. And so when we talk about protection, we're talking about pretty much keeping yourself from in a position to where you don't have to start over again. As one of my clients tells me, he said, "I don't need to gain more as long as I don't lose what I already have." And that's what protection does. It allows you to keep the things that you work so hard for in life. So as we talk about protection, then there's things that we have to prioritize. Of course, from the most important to the least important. And so there's basically four that I initially share with my clients. Of course, there's additional things that are important that we need to protect. But when we're talking about building that initial financial structure, there's four things that we really want to primarily focus on. And the first of the four is your life. I think that is the most important of the four, is that you want to protect your life. And so when it comes to financial matters, life is defined a little bit differently than the traditional way of defining life. We define life from a financial standpoint as the ability to produce. As the ability to provide, and then a timeline in which you need to provide. And so the first question becomes that when you're talking about provide for who? Well, you want to provide for yourself first and primarily and foremost. And then, of course, if you're married, you want to provide for your children, for your family, extended family, so on and so forth. But the first of these things that we want to protect when we're talking about building a financial structure is the ability to provide. And so when we look at this, the question becomes, well, how do we do that? Well, we protect life with life insurance. That is that's the way you protect life insurance. Now, a lot of folks, when you're talking about life insurance, the first thing they think about is death. So they don't want to really talk about life insurance. But one of the things that I share with my clients is that the emphasis is on life, hence the word life insurance. And so those of us who are in the industry, we understand that life insurance have what we call living benefits. Benefits that you can't take advantage of while you're alive. And they are many. And I share a few with you here. But one of the, what I think is one of the most important benefits of a life insurance is that it gives you the ability to instantly create an estate. I mean, just imagine that in a matter of seconds, or let's say days in this case, that you can create, a 300,000, 500,000, $1 million estate for yourself and your loved ones. And that's what we call wealth. Not only individual wealth, but of course generational wealth. And generational wealth is one of the, it's an additional building block that we will talk about later on in the series as well. But that is one of the living benefits of life insurance, is that you can instantaneously create an estate, 1 million, 2 million, 3 million, whatever you choose, that type of estate. Now, depending on the situation, an additional living benefits allows you to access 70 to 75% of that estate. So I want you to listen to that very carefully because that is very important when we talk about financial strategies or financial matters and building a foundation or a financial system that will allow us to accumulate wealth for our families, for ourselves as well as our families. So as I stated, life insurance allows you to create an instant estate, and that estate can be anywhere, whatever you choose it to be, $1 million or more if you so desire. And depending on your situation, you can access 70 to 75% of that estate. So that is a very important living benefit of life insurance. Another living benefit is that of savings. Now, most people traditionally we save our money in a savings account at a bank or maybe a credit union, and they pay you anywhere between a half a percentage point, maybe if you're lucky, a point and a half. That's the interest that you get on your savings at saving with the saving account in a bank or of course a credit union. However, with life insurance, you can get a guarantee. In a lot of cases, a minimum guarantee of 3% interest on your savings. Now, if you recall, the third principle of money management was the principle of understanding compound interest. And so when we go from a half a percentage point to 3%, and in some cases with a life insurance policy, you can get as much as a 7 or 8% return on your money. That can make a huge difference when we talk about accumulating wealth and with life insurance or with our financial strategy. So again, that's just two of the living benefits. Again, the ability to create an instant estate, as well as the savings benefits that can give you as much, in some cases, a 7 or 8% interest rate on your savings. So after we look at protecting our life, and of course, the next thing that will fall in line that would be your health. It's very important that we protect our health. Now, health insurance is a little bit different than medical insurance. So a lot of people get the two confused, the two there. But what health insurance does, it gives you the ability in a lot of cases to continue to replace your income. If you have an illness that prevents you from being able to work, then of course health insurance will allow you to continue to receive that income. In addition to that, there are certain types of health insurance, what we call critical health insurance, that will actually compensate you if, God forbid, you incur one of these critical illness. For an example, cancer is one of the critical illness that is covered under a critical illness policy. And for whatever reason, cancer seems to be on the rise here in America. So health, critical illness policy covering that could be a tremendous benefit when we talk about, again, building a financial structure. So again, we talk about in terms of protection being the first building block. The first thing in terms of prioritizing is our life. The second thing would be our health, having different policies in place that if something should happen, we can continue to receive income, or God forbid, certain illness we can be compensated for. I hate to put that way, but in essence, that's what it comes down to. So then the third thing, which is one of the things that a lot of people miss out on in terms of providing protection, is that for the majority of us, we all work for a living. We have what we call earned income. So the third thing that would be most important to us from a standpoint of protection would be our income. We need to be able to protect our income. If something should happen, whether it be an illness, whether we be laid off work or whatever, we want to ensure that our income continuously come into the household, because most of us we manage our household based on our household income. So if something should happen to the income, we have a dominoes effect. So there are policies out there that will give you as much as a 85% protection of your income. So if you're making $100,000, I just like to use round numbers for example. If you're making $100,000 a year, something was to happen to where you no longer was able to make that, then you can still protect 85% of that in some cases, which would allow you to continue for the most part to maintain the type of lifestyle that you currently have. So that's very important. Again, protecting our life, protecting our health, and then protecting our income. And then one of the things that I think is real important is what we call mortgage protection. And a lot of people say, well, I have mortgage insurance. But the difference between mortgage insurance and mortgage protection is that mortgage insurance protects the bank. Mortgage protection protects you. And if you don't have, if you don't own property, then one of the building blocks that we will talk about is real estate. You know, real estate is very important when we talk about a financial structure, financial strategy, accumulating wealth, being able to leave that wealth to generations and so forth. So that is another block that we will discuss at a later time. But when we talk about mortgage protection, basically what that does, that says no matter what happens to the primary breadwinners, and in most cases this household has dual incomes, you know, husband and wife, or husband or partners and significant others, whatever the case may be. There are, in most cases, dual income coming to the household. So if something happens to one of those incomes, again, you have, again, a domino effect. You know, families have to move, uproot, because they're no longer able to maintain what they can with two incomes. So this is probably the shortest of the remaining 7 or 8 different building blocks, that being protection. But we want to ensure that when we talk about building a financial structure, after we have that foundation laid, we go into the first building block, that being protection. And then when we talk about protections, there's pretty much 4 areas in which we really want to concentrate on and make sure that we have things in place that, barring any catastrophe, you know, we will be able to maintain and continue to build our wealth and our net worth. And again, those are protecting your life, protecting your health, protecting your income, and protecting your mortgage. Again, this is Dennis Sheffield. I'm with Team Sheffield Financial Services. Hopefully these short videos are informative to you. And of course, if you have any questions or you choose to, you're looking for a financial advisor, I am available. There's contact information on both my Facebook page and my YouTube page. So until next time, we talk to you soon, and you have a good evening.